Welcome to Trader Wall. In today's video, we're diving into two of the most popular trading strategies, holding and day trading. Both approaches have their unique benefits and risks, but which one suits you the best? By the end of this video, you'll have a clear understanding of these strategies, their pros and cons, and how to choose the one that aligns with your trading style. Let's get started. Introduction to holding and day trading. What is holding, swing trading, or long-term investing? Holding, also known as long-term investing or swing trading, is a strategy where traders or investors buy assets and hold them for an extended period, typically from weeks to months or even years. This method is based on the belief that, over time, the value of the asset will increase as a result of market trends, business growth, or other factors. Typical timeframes for holding. For holding, investors aim to benefit from long-term trends, so they're not concerned with short-term market fluctuations. This could mean holding stocks for years or keeping cryptocurrency for months. Common assets for holding. Assets commonly held in this manner include stocks, bonds, mutual funds, ETFs, and long-term commodities like gold, as well as certain cryptocurrencies like Bitcoin or Ethereum. What is day trading? Day trading, on the other hand, is a short-term strategy where traders buy and sell assets within the same day, often several times during the day. The goal here is to capitalize on small price movements, leveraging frequent trades to gain profits. This strategy requires constant market monitoring and a deep understanding of market trends and patterns. Typical timeframes for day trading. Day trading generally involves opening and closing positions within a single trading session, whether in the stock market, forex, or crypto. Common assets for day trading. Day traders typically work with stocks, forex pairs, cryptocurrencies, and even futures. Anything that has high liquidity and price volatility is a good candidate. Pros and cons of holding. Pros of holding. Long-term growth potential. One of the biggest advantages of holding is the opportunity for long-term capital appreciation. Over the years, stocks and crypto assets generally increase in value, especially if the investor picks the right assets. Less time-consuming. Unlike day trading, holding doesn't require constant monitoring of market movements. Once the position is established, the investor can leave it and check it occasionally. Tax advantages. Many countries provide tax benefits for long-term investments. For example, long-term capital gains taxes are often much lower than short-term gains taxes. Lower transaction costs. Since fewer trades are made, transaction costs, brokerage fees, taxes are lower, compared to the frequent trading involved in day trading. Cons of holding. Market volatility risks. While holding, you might experience significant downturns in the short term, particularly in volatile markets like crypto or tech stocks. Less control. As a holder, you don't have the flexibility to quickly react to market events. This can be risky if there's a sudden downturn or if an asset drops below a reasonable price. Lack of liquidity. Since you're holding assets for an extended period, it can be hard to liquidate them in case of emergencies. This could tie up funds that could be more useful in the short term. Pros and cons of day trading. Pros of day trading. Quick profits. One of the main attractions of day trading is the potential for fast profits. With the right strategy, you can make significant gains within the same day. High liquidity. Day traders capitalize on the constant price fluctuations within a trading session. With liquid markets like forex or highly traded stocks, there are always opportunities for profit. Active involvement. If you enjoy being hands-on with your investments, day trading offers the ability to make rapid decisions based on real-time data. This active involvement can be exciting and rewarding for some. Leverage opportunities. Many brokers offer leverage for day traders, amplifying potential gains, though also magnifying risks. Cons of day trading. High risk. Day trading is extremely high risk. Sudden market changes can lead to significant losses, and traders can lose money quickly if they're not careful. Stressful. Constantly analyzing charts, watching prices move, and making quick decisions under pressure can be very stressful. It's not for everyone. requires time and attention. To be successful at day trading, you must dedicate a significant amount of time during the trading day, continuously observing market changes and executing trades. Higher transaction costs. Day trading involves frequent buying and selling, which can result in higher transaction costs compared to long-term investing. Which one is right for you? What type of trader should hold? Risk tolerance. Holding is ideal for investors who have a lower tolerance for risk and are not concerned with short-term market movements. Long-term investing is typically safer as it benefits from market growth over time. Patience and time commitment. If you're not interested in constantly analyzing charts and managing trades, holding is likely a better strategy. You can set your investments and leave them alone for months or even years. Investment goals. If your goal is long-term wealth accumulation or retirement savings, holding is the strategy to go for. Over time, you're more likely to see consistent growth from solid, well-chosen investments. What type of trader should consider day trading? Risk tolerance. Day trading is suited for individuals with a higher risk tolerance, as they are constantly exposed to market fluctuations. Time commitment. Day trading requires time. If you can dedicate hours each day to monitoring the markets and executing trades, day trading might be right for you. Skill set. Day trading requires an understanding of technical analysis, chart patterns, and market sentiment. If you have a keen eye for market movements and a strong grasp of trading strategies, day trading can be very rewarding. Investment goals. If you are looking for short-term gains, day trading can be appealing. However, if you're hoping for long-term stability, it may not be suitable. Conclusion. In the end, whether you choose holding or day trading depends largely on your personal preferences, risk tolerance, time availability, and investment goals. Both strategies offer distinct advantages and challenges. While holding offers long-term growth potential with less stress and involvement, day trading can be more exciting and profitable in the short term if you have the skills and commitment. By understanding the nuances of each, you can make an informed decision about which approach is best for you. Whether you're a long-term investor or a short-term trader, understanding these strategies is key to success in the market. If you found this video helpful, make sure to like, subscribe, and hit the bell icon so you never miss another trading tip from TraderWall. Thanks for watching and happy trading!